Hello everybody, welcome to this video. It is the 28th day of January 2013. Oftentimes within the Forex market, you can see the pairings like Euro, US dollar, United States dollar, Japanese yen, so on and so forth, XAG, USD or XAU USD, which is gold and silver pricing at the dollar. Not uncommon to find those. What's also not uncommon is to find multiple crossings for the same thing, like the Euro US dollar, or the US dollar euro, but what you will not find is the opposite crosses within these, which is what we're going to do today, at least within gold, and show the USD / XAU. How is the dollar doing against gold? You already know the answer if you're subscribed to this video. Not doing well, but let's take a look at it starting within the daily chart, which is one single US dollar with 1 single milligram of gold. You need 1,000 milligrams to make a single gram. You need about 31.1 grams to make a single ounce. That's about 31,000 plus milligrams in an ounce. And $1 will get you about 18 3/4 of those milligrams. So with that being said, this is a daily chart. Obvious uptrend within this, and the Fibonacci retracement will be from this low and this high. Maybe, just maybe, we can see within this downtrend, which is actually an uptrend on the reverse, that maybe it's going to reverse it and will go higher, or gold will go lower. There's a resistance at this point in here, but when you're within this middle part, you know what, it's neutral. You don't want to spend too much time dealing with it, unless of course you know where the path of least resistance is, because oftentimes these things will break out within that trend. And you can see right now, well, it's in an uptrend, maybe it's going to break this resistance. Well, let's expand this out, go from the daily to the weekly time frame. Let's do that now. Okay, so downtrend is in yet another sideways consolidation. So, okay, so just breaking out above here only means making it to the top part of this range, which in gold is the lower part of it priced in fiat dollars. Okay, furthermore, we have this running average and this 18 band, choppy as anything, above and below. The Fibonacci from this high and this low, it's staying. This area has been support. It's obviously been breaking above a few times to this level, but doing not so much. And again, if we expand this out, well, we'll go from the daily or weekly chart to a 37-day chart, with each candle representing 37 days, and that's about as clear of a downtrend you're ever going to get. The running average, pretty much straight line. That wasn't, but the 18 average, resistance a little bit in here, but it can't get above it, which is the reason why that would be fairly straight. And the Fibonacci retracement is, well, 9% and 15% from what I got, because when you're getting your ass kicked as badly as you are here, you really got to take baby steps, because you see these little rallies, you just don't believe them. So why would I be believing this one? Now, obviously, it could easily make a run for another high. If it breaks this resistance, then maybe, just maybe, we'll head up to this level. But I'm not going to believe that either, because of the charts don't show anything yet. And for me to believe a trend, and we're in a major downturn, I need to see it get above this 18 average, come back, find support with a higher low, probably within the band, have this band flatten out, maybe barely go higher, and then break the resistance it established there, establish a higher low, and then make a higher high. Then I'll like it. That's a lot of things to happen to reverse the trend. It's probably not going to do it, and breaking down below the support, and you'll be making new lows. It could be just slow and grinding its way through like this, or it could be big, faster moves, and we'll see that more clearly when we expand this from a 37-day chart to a 114-day chart, going back to 1968. The Fibonacci retracement is from this low and this high. So just for fun, just to see what would come up, I put negative 61.8% in the computer, and it put a line at 1753, which is the area that's, of course, been, I guess you can say, support for the most part. And we can take a look at this running average from this level, finding support in here, yada, yada, yada. You break above it, and you didn't find support. Boom, it fails. As I talk about with the 18 average, you need for it to flatten out. That's what it did. Break above it. That's what it did. Come back to it. That's what it did. And then break higher, make a higher high. That's what it didn't do. And then when it doesn't do those things, you oftentimes can get situations like this occur. The 18 average band, something hasn't touched in a coon's age, as well as this lower band right now. It's been boom, 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 hitting it over and over again, seeing this small consolidation, which you've already seen on the shorter term chart. So you're in the consolidation, sideways movement. You don't know how long it's going to take place. And it could be something that ends in a week or a month, a year, probably not a decade. But again, that's it's interesting that the minus 61.8 came right around here. Okay, let's expand this out to the yearly chart, going back to 1914. Back in the day, where your single dollar would get you 1,500 milligrams, or 1.5 grams was worth $1. Today, it's a little over 18. Alrighty, same thing. We see the same pattern with the 18 average. It's the same low Fibonacci from the normal high, the normal low. It really doesn't matter too much which numbers I place, because major downtrend, there's your consolidation period, your breakthrough support, and it's been consistent red candles down below the 18 average band and well below it at that negative 17.9% within here to here. That's what this, well, what Fibonacci do I got? I got the low of 36. So I got Fibonacci from here to the high of 1,500 here. So that's where the Fibonacci lines come in. So therefore, on the rally from this point here, it was unable to get up to a 38.2%. That's just not strong at all. And yeah, again, the 18 average band, I used to have a percentage for it. I don't have that anymore, but it's in one of the negative ones, which is unusual that it's below the band like this. What I like about these upper and lower bands is you can use it for one purpose of saying it's down a lot or it's had a big down or up move, because it's a serious down move or up move when it hits it. So it was a serious move when it hits it in here. So now what I would normally expect is for it to bounce from this level, and then whatever it's going to do after that, it's going to do, or really crash through and continue the movement. Generally speaking, if it crashes through, I would expect candle sizes like this after movements like that. But that, of course, has not been the case. It's been one of those wearing you out kind of deals, and therefore, I would say continuation of this or that big move to continue. So continuation of these size candles for the next little while, but there's nothing at all to indicate that this is bottom yet. You'll have analysts saying, oh, gold's in a bubble, and that's basically them saying, guys, this is a chart we'd like to go long on, yay. Okay, you're bottom fishing, and I don't think you're fishing. I'm trying to think of some sort of joke analogy about a really bad fisherman, but maybe it's like fishing in the middle of the afternoon, when back in the days when I went fishing, I would never catch anything then. Just saying bad fishing. And I'm just rambling on. It's 10 minutes, so I'm going to end the video and take care, everyone. Bye-bye.